Just quickly, Adam, on AMD. I mean, yeah, you haven't looked through the numbers, but directionally, what's your take?
Again, we teed it up like these companies are starting to overproduce consumption. Not really different from Micron, where we saw, their earnings report. I can't look up my phone, but I feel like this is an every even year thing. I know 2002, 4, 6, 8, 10, and 12, they all pre-negged either Q2 or Q3 at AMD. So, probably just have to reduce the outlook for the fourth quarter, and they know it.
For sure.
Yeah.
Steph, I guess thoughts on AMD, but also in the context of how you're positioned or how the market is positioned ahead of the start of earnings.
Yeah, well, I don't think AMD is a surprise at all. As Adam mentioned, we had Micron. We've also had NVIDIA. We've heard across the spectrum that PCs and gaming has been weaker than expected. I'm a little surprised at the reaction because this stock is down 53% year to date, reflecting a lot of bad news. But that being said, we're seeing double ordering and triple ordering coming home to roost throughout the semiconductor space. We've been talking about it. I've been talking about it since March. I only own one semiconductor. That's Broadcom. I think they're better positioned with their end markets. It's cheap and offers a nice yield. But I am underweight tech. I am underweight semis in general. And I don't think, I plan on staying that way into the end of the year. I'm more focused on kind of the commodity sectors. I like energy. I just added to Occidental just yesterday. I think that market stays very tight for a lot longer. I like materials, industrials. And what's interesting, Mike, is that value actually has outperformed growth. And those are value sectors along with financials. Value's outperformed growth by about 12% year to date. And I think that is going to continue. So that's another reason why I'm not overweight or even market weight on tech. In terms of the market, it felt good on Monday and Tuesday and even yesterday's rally because people thought that the Fed was going to pivot. This is exactly what happened in June. The Fed is not going to pivot. And if you listen to Neil Kashkari today, quite hawkish, and he's a voting member starting next year. So it matters. So I think the Fed is going to stay very hawkish. They're going to continue to raise unless something breaks, like Maynard said. But I think it's going to take a while to see something break, if it does at all. But core PCE is much too high. Wages and salaries much too high. Rents and as I mentioned, commodities have actually stabilized as well. So I think you just want to be prudent, diversified, own high-quality companies, free cash flow, but more leaning on value versus growth.
Yeah, and to your point on AMD, the stock has actually kind of firmed up just a bit, down about 2.5%, no longer down more than 5%. Keith, in terms of general market field position here, we can kind of examine, I would say, the last 6 or 8 days of trading as that really aggressive plunge to this real oversold level, new low for the year, intraday at least, and then very strong rally that some folks are saying, again, in the short term might earn back the benefit of the doubt for the bulls. What do you think?
Well, first, Mike, great to be with you. We were with you back in August around the highs, around 42 to 4,300, and we've said, hey, this is a good time to take some exposure off. But last week, during that plunge, at least on a short-term basis, our view was that things had become too extended on the downside, sentiment too negative, especially how we closed to end the quarter. And we were saying this is not time to press the downside, and we're more positive on a short-term perspective. And coming into this week, even after that rally, I still think the upside, we're likely to see more upside before this rally is over. As you know, and you follow this stuff too, Mike, I mean, we're still very stretched on most of the technical indicators. There's still a lot of doubt out there. And we know position is light as we head into this fourth quarter. So I think there's more upside. Our point of view is, that for the next 6 to 12 months, we still have more of a cautious view. But we would use a further bounce that we expect to reposition, if you haven't done so already, to become more defensive. We think that 4,000 to 4,100 level is going to be a pretty hard level to get through. And again, this is a more tactical market, Mike. We're just seeing, June with the lows, we had a big 17% rally, a big 17% decline. And now we think we have a little bit more of the short-term rally to go.